All right. Welcome. We are ready to scalp and trail. That's what we're going to do today in our class. And so we are here in the afternoon session. This is looking at the Dow. This is the mini Dow. And you see up in the upper left-hand corner, it says we're looking at a range bar. This is a range bar 6 chart. And so what we're going to be looking at is kind of a unique chart because it's also got the Heiken Ashi bars turned on over the top of this chart. And we've also got a couple of indicators down here in the bottom. We have the RSI. So that's the relative strength index. And it's just an indicator that helps us know when the market's overbought or oversold. If the line's down in the bottom, it indicates that the market is oversold, and we can anticipate if it breaks back into the channel, you can see above the 30%, that this would be a location in which we could consider a reversal in the market. And of course, that worked out pretty well right here. You can see, and so this market is starting to rally. We also have some dot systems in here. One of them is counting the Elliott waves. That's what the blue lights are doing. And then the yellow ones are just, those are just average true range. I use them for trailing stop orders and for entries. All right. So we can use that for a reversal position to get into the market. Then we just trail our stops on those yellow dots till exit, or we can use a limit order to take profits along the way. So this is a scalping strategy. This is the range bar 6. Range bar means, of course, that each price bar is not based on time. There's no time involved. It's just simply the movement of the market itself. So it's a trend indicator or a trend tool, trend chart. And so each minimum move is 6 minimum moves. That's why it's a range bar 6. And each bar is 6 minimum moves before it'll create a new bar. Now, we don't know how long that's going to take. It could take a couple seconds to create a range bar 6 bar, or it could take several minutes or an hour, depending on how active the market is. So we can change that. I've got other time frames in here. There's a range bar 25. I've got a range bar 15. I also have some minute charts down here. You can see I got a 1 minute, 2 minute, 5 minute chart. But right now we're looking at the Dow. This is the mini Dow in the futures market. Now we are in the futures market, just to give you a little bit of a indication here for those of you who are new. I'll give you a little banner to read down there. We are trading out of the Chicago exchanges. This is not the New York market, even though it is the Dow Jones, which is the index for the Dow 30. We are trading it out of Chicago. So there's no pattern day trading rules. And to put on one contract, it costs us about $1,000. So we're going to consider $1,000 every time we put on quantity 1. And what that does is it allows us to control a very large amount of the mini Dow, or in this case, the Dow Jones Industrial Averages, right? So if we put on $1,000, I'm just going to draw a dollar calculator in here. That trend right there from bottom to top was a $155 move, or 31 ticks. All right. We're in a range bar 6, so that's 31 ticks. So that's $155 for a $1,000 investment. How long did that take? Well, that low point came in at 1251. And so we can just measure those bars right there, 1251 to where it ended right up in here. That was 3 minutes and 51 seconds. So that was about 4 minutes, about a 4 minute, let's say 5 minute time frame that made $155 with a $1,000 investment. All right. So sometimes the market moves faster, sometimes it moves slower, but that's the leverage that we have here in the futures market. And again, there's no pattern day trading rules, so you can go long or short as many times as you want, no restrictions. This is the last bastion of true capitalism on earth today. All right, who are you? Who's this guy talking to us? My name is Lan Turner. I'll give you another little marquee to read down there at the bottom. I just switched it if you can't tell. I'm a former instructor at the Chicago Mercantile Exchange of the Chicago Board of Trade. I used to teach out there from about 2000 to 2010 was kind of the time frame that I was out there. And I'm now a current instructor of finance at Utah Tech University. So very happy to have our students here. This is kind of our lab. This is where we practice what we preach. So we go and we teach the classes at the university, then we come out here and we practice the things that we learn in class. So we do all kinds of fun things. I just barely finished a short-term trading class at the university, and so we are learning a little bit more about day trading and short-term trading. And so that's why we're here looking at these markets. On Monday, we start our options class. And so we'll have our labs out here on YouTube where we can start trading options once again. And we'll talk about some different strategies that we can use for trading options, both in the stock market and in the futures market. All right. So we're going to learn that starting Monday. But for now, We are here Thursday afternoon, Power Hour. We're going to see if we can't get a few trades going one way or the other. And I'm using a trading platform called Track and Trade. All right, so my trading platform, I'll switch that little marquee up down there again at the bottom. This is Track and Trade Futures. It's the futures version, and this is the platform I use. It's a trading platform. It's not just a charting platform. So you can actually use a lot of different tools for short-term trading and very quick drag and drop type orders and pre-programmed order tools that allow you to execute your trades very quickly that kind of need when you're day trading or doing short-term trading. So I've got these buttons in here programmed in, and you don't have to write code. It's just you have to set them up properly, kind of program them in so that they'll do what you want. And I'm going to show you my settings. So the first one is just a buy market with a 50 stop and a trailing ATR with a limit of 75. So let me show you how I've got that set up. We're just going to come in here. I got it listed as my number one strategy. So that's the settings for that button. All right. So you can take your little cell phone, you can snap a picture of it, and you can copy my settings. And the way you do that in Track and Trade is you just right click on the tool, come down here and say add new QOCO, and then you can put that information in there. So this is my button number 2. Again, I've got it listed as my number one strategy on button number 2 as well, but it's just the opposite. It's a sell market instead of a buy market. I've got my stop set at 50 and limit, but I set my stop back at 50 and people are like, oh my gosh, that's a long ways away. Well, the thing is that it jumps immediately to the ATR because that's my actual trailing dot, right? My yellow dot right there is the average true range, and that's a dot. And so it'll drop it at 50, but it immediately jumps up to that yellow dot. Okay. So we're going to start to trail. So I have a strategy. I call it breakout or bailout. Either the market either goes in our direction or it doesn't. And so it's breakout or bailout. So you get out of the market if you're not immediately right. All right. Now, the next one I'm using is one where we actually kind of trail the market back if it's going to fall or have a little pullback by the dip, right? By the little pullback as it's in an uptrend, but it kind of pulls back and then rallies. So it's kind of a unique setting, and it does it automatically. I'll show you this one here. It's number 777 because it's my lucky number 777. I'll show you the settings for that one. And again, take your little cell phone and take a picture of that. This is how I like to use this one. So my attached stop, you can see, is 8, and my attached limit is 50. So this is my what I call my trail. So it's my scalp and trail strategy. So this is the trail side. So I'm looking for a longer profit, right? So this is the scalp. We're going to scalp out just a few pennies, and then we're going to set up a trail, and we're going to trail a little bit further. So my attached stop is at 8, and my limit is at 50. And then the stop is going to trail behind 0.4, and then it's going to start trailing on the ATR. So I'll show you that one. It's kind of a unique tool. And we'll come in here and show you the other 777, and that's this one here. Again, our stop is set at 8, and it depends on the tool that you're using. You might want to have that stop be further back, and then it depends on where you're getting into the market. I've got it set at 8. This is a little aggressive because we're on an aggressive market, and we may adjust that. We can set that stop further back, all right? But we're going to come in here, and you can take a picture of that one. And I'll show you how this works. Now, these two tools work best in a trend. Okay, now they're scalp and trail, so you're looking for a trend. If the market's trending up, we're going to look for the market, and we're going to look for the little pullbacks as it pulls back against the trend and then continue. That's what 777's for. And then the buy market is just, you're just going to think the market's going to continue to go in the direction of the arrow. So you punch one in, and it sets the stop and the limit automatically for you. And of course, those are adjustable. You can do that. So I'm going to example those here today. We've got just a few minutes here as the market's getting ready to close in a little less than an hour. And so we're going to come through and we're going to practice these strategies. And hopefully we can demonstrate the software as well as the settings that I've got in here, as well as, maybe we'll even try and make a little bit of money. So that's the whole idea, right? Right now, we're looking at the range bar 6 in the Dow. If we come over to our charts, we can come down and look at a different market. This one's kind of doing okay. I mean, we had a nice little Elliott wave drive 1, drive 2, drive 3. So we're kind of at the top of the Elliott wave. Doesn't mean it can't go to drive 4. Certainly can. It's just the probabilities start to get less and less the higher you go in these drive patterns, all right? So once we get to the third drive, we oftentimes will expect some sort of a little retracement or a pullback against our Fibonacci measurement tool, right? And we can measure in there. And we anticipate maybe the market would come back half or 50% 50% of the last 3 drive major moves. So maybe down in this region here. Whether that'll happen or not, we don't know. It may just have too much strength and go up and make a 4th drive. Now, because a 4th drive is rare, it's difficult for us to want to take that trade because it's not a very high probability. And so trading is all about probabilities, right? And so I have a little slide here that kind of demonstrates that for you. Let me pull that up for you just to show you my probabilities table. And this is what I have here. So this is my probabilities table. And you can see it's kind of like playing blackjack. When you go down and you play blackjack in Las Vegas, you can go into the bookstore and they give you a little card and it tells you what your probabilities are. If you pull up a pair of 2s and the dealer has a king sitting there, well, your probability is not very good, right? If you pull up a 17, let's say you have a 17 and your dealer has a 10, well, you're like, oh crap, should I hit or not? I didn't do it. Should I hold on this 17 or should I not hold on a 17? And then if you got a pair of aces, you're like, oh, that's good. I like a pair of aces, right? So, your odds of playing the blackjack table, very similar to what we do here in trading. We need to know what the odds are depending on where the market's at in the trend. So you've oftentimes heard the trend is your friend until it bends or ends, right? Well, how do we know when it's bending or ending? Well, you know your odds. So we look at the odds table of the financial markets, and that's what this is here. It's a little odds table. Now, where did I get this odds table? Well, I learned it at the Chicago Board of Trade, for one thing, when I was there working. I was there actually as a teacher, but I learned more than I actually ever taught. So I learned it when I was there at the Chicago Board of Trade, and they teach you the odds of the financial market. And they teach you how to read the financial market and what the odds are. And we use tools like Elliott Wave, Fibonacci, accumulation, distribution. And I've set up kind of a little model here of what I learned when I was there. And I created this little odds table, all right, based on the information they taught me. And I actually published that in a book. And you can get the book, of course. You can get the book. It's out on Amazon. Just go out there, and this is the book. Just search Lan Turner, and you can get the odds book. And it teaches you all these strategies that I've got here. And it teaches you how to read the odds of the financial markets, all right? So we know which, whether we've got a pair of 2s, whether we're dealing with a 17, or whether we've got a pair of aces, and whether we should be trading one way or the other. So that book is the Stock Market Playbook of Strategies. You can get your odds out there, and it's 235 pages. Just search Lan Turner and you'll be in good shape. All right, so let's come down here. Let's blow this up a little bit so you can see a little better. Now look at what the market did. It did just exactly like a train on rails, right straight out of the manual. And so we got drive 1, drive 2, drive 3. Now we got our little ABC pattern up in here, and we came right back down into that little circle I drew, the Fibonacci sweet spot, right? So that's how you learn how to read charts. And if you learn how to read charts, you're going to be better at this than you are if you just kind of wild ass guess it. Now, I oftentimes say we don't want to be a wild ass guess, right? We want to make sure that when we trade, we make scientific wild ass guesses. And that's because nobody really knows where the market's going to be. And, you can sit here and do all of your very best, technical analysis and count your Elliott waves and Fibonacci's, and the market will just break the rules sometimes. And it does that. But it's all probabilities. Again, it's not anything perfect. Nobody knows where the market's going to go. We just look at what the market's done in the past, and we try and take advantage of those same patterns over and over and over again. If you get good at reading the patterns and looking what the odds are, you can say, well, I got a pair of 2s, or I got a 17, or hey, this is set up to be a pair of aces or a king and a jack, and I'm pretty good shape here. I'm going to bet some money on it. I'm going to risk my position so I can see if I can make some money. So you want to kind of trade the high probability locations and ignore the low probability locations and wait for those good setups. And so you can read the chart. And if you learn how to read the chart, you're going to be better at this trading thing than you are if you don't. And just remember that trading is like playing chess. All right. It's all a game that we're playing. And remember, it's a game of strategy. So we got to come up with good strategies for taking other people's money, because that's what we're doing, right? There's money out there in that market, and we want to take it away from whoever has it. And the name of the game is there's somebody on the other side who wants to take your money away. So it's a game of strategy. I want to take their money away. They want to take my money away. So I want to figure out what they're doing, and then I want to figure out a way to take their money away. All right, put it in my pocket. They want to do the same. They want to figure out what you're doing so that they can reach into your pocket and take your money away. So it's all a game of strategy. And so what we want to do is we just kind of want to figure out how the psychology of the market moves through price and time. And we use mathematical models and indicators and all that kind of really neat stuff. But when it comes right down to it, it's all a swag. It's just a scientific wild ass guess. But we want to be as scientific about our wild ass guesses as we possibly can. We don't want them just to be wild ass guesses. Be as scientific about your wild ass guesses as you can. Count, measure, set up, trigger, and follow through. All right, that's our mantra. Count. What are we counting? We're counting the waves. How many waves are there? Generally 3 retracements, 3 rallies, and then 2 retracements. So we're going to count. We're going to measure. What are we going to measure? We're going to measure the waves. All right. How big is the wave? How far did it pull back? How big is the next wave? How far did it pull back? What's the next wave? How big did it pull back? Now over all 3 of them, how far did it pull back? So that was the measure, count, measure. And then the setup. What's the setup? What is it that's going to get us to decide it's time to get into the market? Count, measure, setup, and then the trigger. What does the market have to do to trigger us to get into the market? All right. Does it have to break a trend line? Does it have to have a mathematical arrow? What is it? Does it have to break a previous high or a previous low? Higher highs and higher lows make uptrends. Lower highs and lower lows make downtrends. What does the market have to do to trigger us to get into that market? And then are we going to take a short position, meaning we make money when the market goes down, so we have to sell first, buy back low later? Are we going to take a long position and anticipate a rise in price where we buy low, sell high? Now, the only way you make money in these markets is to buy low, sell high. But of course, you can take a short position, which means you make money when the market goes down, but you sell first high and then you buy back low later. All right. So you can sell first, buy back low later, or you can buy low, sell back high later. So it goes both directions, and they let you do that, and if you want to know kind of the concept behind why they let you do that, I did a video yesterday. It might have been the day before yesterday. I can't remember. Yesterday or the day before yesterday that explains that. Just go back and watch those videos, and it'll explain in great detail why they let you take short positions and what this whole futures market is all about. All right. So those are some great videos you can go back and watch. But right now, we're looking for an opportunity to take a long position or a short position. Do we think the market's going to rally, or do we think it's going to fall back down? It's not very active right now. It's kind of a little bit sideways. It's kind of in those yellow bars. Those yellow bars means that we're neutral, and we might be looking for a breakout. We just had a nice 3-drive pattern, and we just had a little retracement. So we may get a little ABC projection down. Okay, so a little ABC pattern. This is our ABC pattern, and now we might get another little drop down in here as it pulls back. Of course, it could also be read the other way. Markets can always go one direction or the other, right? And usually they do one or the other. So we got up, up, or it could go down, up, down. We don't know. Markets can only do 3 things, though. They can go up, they can go down, and they can go sideways. And so in the process of going up, down, and sideways, though, they can do all kinds of different things. And so we make money, as you've seen. If those of you guys who have been here before, markets can only do 3 things. They can go up, they can go down, and they can go sideways. The thing that's worst for us is when they go sideways. We don't like that, because when markets go sideways, they beat us up really bad. All right. They go up and down and up and down. They don't take a direction. They don't go up or down. Just kind of go back and forth. And that's kind of not good for us. We want to see a market trend. Now, this is the Dow, and it's kind of just going sideways now after it made that nice 3-drive pattern, made a little retracement, and it's trying to decide what it wants to do. Now, this is very common. Once a market fulfills its 3-drive pattern and its ABC retracement, it oftentimes just goes sideways for a little while people try and decide what they want to do, whether they want to start buying again and pushing the market higher, or whether they want to sell and get out and take some more profits. So let's look at the Dow. That's the Dow. Let's go look at the NASDAQ. I'm going to come over here, and this is the daily NASDAQ. You see we got a nice big rally. Yesterday, the Fed lowered interest rates, and they lowered the interest rates by a little bit further than people anticipated, right? They were expecting 0.25 or 0.5. I think they did, 0.25 greater than what the market was expecting. So the market kind of popped, and everybody who bought into that has done quite well today, made a little bit of money. I took $1,000 profit myself out of that market and letting the rest go, see if it won't go a little bit further, but had a good day myself. And so I'm happy about that. Let's come in and take a look at the range bar down here. This is a range bar 15 in the NASDAQ. Now, the NASDAQ moves a little bit faster than the other markets, so I've gone to a longer time range bar. This is a range 15, whereas the Dow is a range bar 6. And you'll notice they're very similar in there, range bar 6 for the Dow versus range bar 15 for the NASDAQ. So the NASDAQ moves a little bit faster, and you can see in here we got kind of a little 4-drive pattern down. We started with this high up here, right? And it went drive 1, counter trend, drive 2. That almost feels like one whole drive for our 3-drive pattern, doesn't it? Just made one little dot right there. But we're going to call it what it is. It's 3. There's 3 drives, and then it made one more drive right there. In hindsight, we might want to say, well, that's just one big drive right down through the middle, but it did break, so we have to call it what it is. So it's the 4-drive pattern on the way down, which is pretty rare. Don't generally get 4 drives. Usually we'll get 3 before we get the retracement. And then that's the odds. That's the probabilities. All right. So, and then we take our Fibonacci ruler and we can measure each individual leg like this and see how far down, right, each one bounced and how far they rebounded for the counter trend, just like that. Or we can come in here, and I'm going to delete these Fibonacci rulers, and we can do the entire Fibonacci ruler from top to bottom. All right, so then we can come in here all the way to the bottom, and then you see the market has a tendency to come right back up into the Fibonacci sweet spot between 61.8 and 38.2. Came right up just like a train on rails, right straight out of the manual once again, hit that 50% retracement level, and it's starting to fall once again. So where this has already had 1, 2, 3, 4 drives down, we'll probably look for it to come up, have this rally. This is going to be a counter trend, I'm going to anticipate, and then turn and see if it won't rally again. All right. And as it comes down in here in this lower region of the RSI, we might look for it to rally. Now, what I don't want it to do is break a new low, because if it breaks a new low, then that means that the market's losing strength and it's weakening, and we may get another drive down. Now, this is kind of a full reset. So if it does that, we might get a larger, what we call a fractal drive versus a full-size drive. And so this might be what we call drive 1 right here. Or actually, let's go back a little farther and see what the market's done. Kind of a couple little resets in there. Let's call this drive, we could call this drive 1, counter trend. If it breaks, yeah, it broke. So now we're going to go into drive 2 down here. So another longer drive. Whether it's drive 2 or 3, we'll have to wait and see. But as it comes down, it broke that previous low. Now, there's another thing we call this as well. This is also called a head and shoulders, or what we call a Wyckoff spring, right? So this comes in here, and it could be a head and shoulders formation down in here. So this would be your Wyckoff spring is what we call that, where it breaks that low just to prove that it can, and then it turns and starts to rally, and this is where we start getting the next leg up like this for another 3-drive pattern to the upside. Doesn't mean it has to. If it comes and breaks this low right here, this head, this is no longer a Wyckoff spring, and then we'd have to move this whole system down one more level, right? That would become your left shoulder, and then we would look for this to be your next head down here and your right shoulder here. So we have to just keep moving our reversal strategy down farther. But this line in the sand right here is very important to us. And it just broke it. So this market's losing strength. We'll see what it does. It's down far enough. I really kind of want to see it prove to us it wants to go up, give us a little pullback, and that's where we'll want to get in. We'll want to get in like right in here. Oh, it just keeps going down, down, down. This market's not good. I'm glad I took my profits when I did. So flushing down, flushing. So now we're getting an A, B, C, D pattern down off the top. So this comes down here. A, B, C. Now we're coming down into the 61.8 projection level. We got 90 and 100 right down here. These are more of our target levels. On the projection, Fibonacci projection level, 130.9 is our golden ratio clear down here. So we'll have to wait and see if it hits the golden ratio. Man, that market's just flushing, isn't it? So we got another Wyckoff spring, another head and shoulders down here. So let's go ahead and draw that in there so you can see it. So this would be your neckline. This is your neckline, your left shoulder. That's your head. We're going to come up, see if we can't create another neckline in here and another little right shoulder. So we'll see how that goes. Now this trend line should be a natural trend line that comes across the top of that, just right in here. So you can kind of anticipate where that might go. So we're coming down into a little triangle or a wedge formation. Should create a little high point pattern in here. You just do your best at reading these charts. Nothing's perfect. and you try and get your trend lines to line up. And when you get an arrow that says, hey, the market looks like it wants to start to reverse, it's coming down, so I don't want to take any long positions yet. We could have taken some short positions, that's for sure, but I was at the bottom of that third drive, so the odds started to get lower and lower. I wasn't real anxious to take a short position when the odds are that bad. Doesn't mean it can, certainly can go beyond that 3-drive pattern very simply, just like it did 3, 4, 5, 6, 7, 8, 9, 10. Certainly can. Just the odds of doing that are pretty low. So we as small speculators, we need to be careful, not take low odd trades. We want to take high odd trades. All right, I got a lot of drawings in here. Let's get rid of those. And now what I want to see is I'd like to see another little ABC pattern. So we come off this bottom. I'd like to see it pull back, break those yellow dots, no blue dots, turn and make what we call a counter trend, right back down. It gets a counter trend. Then I would like to see it start to rally once again down in here, and that's where I could get in and look for another testing of this next high. If we come in here and draw our Fibonacci ruler from this previous high way up here before that reset, we might see this market up in this region here, 5061.8 up in this region here. That's what I would like to see. Now it's just going to go straight up there and not give us an opportunity, a little pullback to go back in. It might just go too fast, too far, too fast, and we missed it. That's not good. We want it to pull back just a little bit so we can get a little buy the dip, right? I want to buy the dip. So I'd like to see it pull back. Oh man, look at that. It went right straight back to the 50% level, just like a train on rails. It didn't give us that little pullback in there that I was looking for. So give me an opportunity to get in. You stinker. Little stinker. Went right straight back to 50% without even giving me a chance to get back in. I guess it gave me a little bit of a chance right there, didn't it? But I didn't take it. A little tiny chance right in there where that arrow came in and said, hey, we went from neutral to green again, and that was probably all it was going to give me. I thought we might get a little bit more, a little bit further pullback, and we didn't get it. So we're going up and we're testing those areas of resistance right now. These are your moving averages. So the yellow one is the exponential 200, and the green one up there, that's the simple 200. So some people use the exponential, some people use the simple. So we kind of, on those 200s, I like to have both of them on there just to see what other people are seeing. These two are exponential. So the blue one is an exponential 100, and then, of course, this is an exponential. This is a 50-period exponential moving average as well. But we're kind of bouncing along right up in there along those 200-period moving averages. Not real anxious to take a long position here. Doesn't mean it can't break above them and come up and test this previous high. It certainly easily could. Lan, you haven't taken an order yet. I know I've been talking too much and drawing too many trend lines. Let's get in here and see if we can't figure out a way to make some money. This market's being a little choppy. Let's see what's going to happen right now. Let's come over here and get ready. We're going to use our tools in here. If it breaks above that, I kind of want a little bit of a pullback. I want to see it break my yellow dots. Break my yellow dots and then go and break them again and give us a little flip-flop. This is what I'm looking for, only to the upside. See that little flip-flop right there? And here's another one right there. That's what I'm looking for. It's just that I want it to happen. I want it to happen for me right here. I want that little flip-flop going the other direction right here. I want a little down arrow and then a little up arrow. And I'm not getting my little pattern. I got these little arrows, which are continuation formation arrows, but I wanted a little flip-flop arrow. That's what I was looking for. But now we're up here bouncing against those 200s. Oftentimes what happens is it comes way back down here. So we'll have to wait and see if we can get that little flip-flop on the two yellow arrows. Lan, why don't you take a short position right here? There's your arrow down. Well, that might be the first flip to the downside, and I want the flop. That's the flip. Now let's get the flop. Okay, if we can get a flop in there, I'll go take a long position. But, of course, you never know. It could just flush and come all the way back down here, and we'll sit here and feel bad once again. We'll take it then. Just take it. Just in case. Take it. You can always recover your loss. What if it goes? What if it goes? Okay, we'll take it. See that? We just click our button. It automatically puts our limit order in there, puts our stop order in there. The stop order automatically jumps to the yellow dot right there. And as the market falls, we're now up $135, $145. I don't really anticipate it going down much further because I think I'm going to get the little flip flop and it's going to go back up. But we'll see. We could put our limit order in here and take some profits just like that, or the trailing stop will get stopped out. So we took our profits. We made $135 on that little trade right there. If we wanted to put another one back in, and that was just with quantity one, and that took us about, I guess we were probably in there about a minute or less. So now it's trying to drop again. We could put another one in there, but no, it looks like we're going to get our little, there's our flip. Maybe we'll get our flop. We want to get the little, it's going down with a continuation formation. Last time we got a continuation formation right here. We got continuation. We went, I'm looking for the flop, right? This is the flip. Let's go for the flop. How far back did it come? Measure with your Fibonacci ruler. Came right back to 50%, just like a train on rails right there. Touched that 50% retracement level. Now I want to see it rally. Oh, we're getting another flip. So another continuation to the downside. We could go ahead and take that if we thought it was going to go, but it's down here pretty low. It's down in that Fibonacci sweet spot. So I want to look for the yellow arrow up. Let's wait for that to happen. As soon as it flips, that yellow dot will flip to the other side and we can jump in there. We got to wait for the flip. Get that yellow dot to come across. There it is. Okay, there's our first entry. There we go. We're going to go one more. Let's add another one in there. Got too long. If it'll move up, let's see our stop. Jump up to the yellow dot here. Need it to go. There we go. We can add one more now. So we'll get 3 in there. See if it'll jump in there one more time. Come on. Come on, baby. Rock and roll for me. Come on. Come on. Up, 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 up. Push it up there. There we go. All right. Now we got these 3 limit orders up there to take profits. I can put them wherever I want. I can say, I want that one to go a long ways. This one I'll go a little ways, and that one I'll bring down here and test that previous high. If it comes up and takes that previous high, I'll take a profit off. I don't want it to have to break the previous high. I have it come in there and just test it. Now, if it turns around and comes back down at this point, it's going to hit my stop, and I'll take a small loss. That's my bailout. So I'm long 3, just looking for it to go. You can see it's trailing those little yellow dots up. And if I think it's getting a little bit too close, I can back it off. I can stop it from trailing. I just right-click on here, say Edit, come in here and say, hey, stop trailing. I'm at my break-even point. And let's just let those 3 go, see if they want to go a little bit farther without trailing up quite so tight. Of course, trailing them up tight, that's, Now I just clicked on 1, so I only turned off 1, so the 1 doesn't trail. The other 2 are still going to trail. So let's see if it'll pop up there. There we go. See, the other 2 are still trailing on the yellow dots. One of them just stopped back there at break even. So we'll see if we can go. We're up 300, 400. Our goal is to make $500 a day. Let's see if we can just make $500, and then we'll be done for the day. But right now we're up 300. We could just take it right now. 300, 400. We got 135 locked in. If we take that, would be 400, almost $500 right now. We were up over $500 at one point. Oh, we got stopped out. So we got stopped out. We're up now $260. So now we're getting a little down arrow. Are we going to get another little flip-flop like this? Are we going to get this little pattern one more time? Are we going to get one of those over here with a little up arrow now? Another little up arrow? If it does, we want to take that next up arrow for the next drive up, right? Drive 1, and then we'll look for drive 2. But we might not get it. It might come down. If it comes down and breaks that low right there, well, then we have to throw everything out and start looking for another setup and a trigger, right? We're going to look for a rally right here. I want to see it go up and break those yellow dots one more time. If it does and the dots flip, oh, down it's coming. Come on, give me the little flop. We're down in the lower region on the relative strength index. So that's telling us the market should have a little upside potential. So let's see it break those yellow dots. We'll try again. We'll get in one more time. Gonna go? Is it gonna go? Is it gonna go? Come on, break those dots. Break the lights. Break them, break them, break them. No, it's not gonna do it. Let's make this a little larger, maybe easier for you guys to see what's going on in here. Okay, I want to see it break those yellow dots and take off and go to the moon. probably happen over here with the blue lights. When the blue lights and yellow dots intercept, those are usually our best setups. We want to see those yellow dots and blue lights cross at the same time. So now we got another continuation arrow to the downside. See that? How we got a down arrow and then we got a continuation. That's your little pullback in there on those red arrows are telling you the market pulled back and it's continuing down. We could have taken that to the short side and started to ride that back down, and I just haven't done one of those continuations yet. Keep looking for the primary signal, which is the yellow, and then the secondary signal is those red ones. So those red ones tell us the continuation. So you get what I call a little shelf in there, and then the red arrow comes in off those shelves and tells you we're going to the next drive down. And I just haven't taken the next drive down shelves. I've only been looking for the primary reversal patterns here, or the continuation patterns of the yellow arrows. But maybe we should have taken, looks like we should have taken that continuation arrow. This market's flushing down. Now look at this thing go. We got drive one here. This is drive one down. We got a counter trend. We got another long, nice, beautiful drive down. That's a nice little ABC pattern off of this thing. ABC is what we call that. Now we're right down here. Look at that, 90%, right down here at the 100% level. So what that means is it was a perfect reflection of this level here. So let's make it a little bit more exact. So from A to B, and then the market gives you a counter trend, we expect C to D, or C to 100, be the same volatility scale as A to B. So we get that same drop. That's how you measure that with that ABC tool. Now we're getting that. Oh, I missed it. Am I too slow? Let's see if it'll pull back and give me an opportunity to drop one in there on my reversal. Now the problem is this is in a downtrend, so this becomes a counter trend. So I'm actually going the wrong way. This is a counter trend, and usually the counter trends are too short. They don't give us enough time to get up in there before they turn and fall to the downside once again. Now it could be a reversal, and it just could keep going straight up. We're up $170. We're only in with one contract. If it comes up and tests that 200 period moving average, I'm going to take that profit. There we go. We're up $485. I'm now $15 shy of my $500 goal. Am I going to risk a whole bunch of money trying to make $15? Probably not. So what I'm going to do, oh, I just rolled that to the next chart. Let's come back here. Where did we go? Oh, that's here we go. Here's our chart. All right. My goal is to make $500 today, and we're at $485. $15 away from our goal. So that's close enough. I'm playing horseshoes today. That's as close as I'm going to get. Let's come over and say hi to a few people. Gary Thomas is saying hello out there. Nice to see you, Gary. If there's anybody else that wants to say hello, you can go ahead and flip your little icon up there, and I'll make you famous. We got a whole bunch of people watching today. There's just not anybody talking. You can talk, though. You can go ahead. That's what this is for. Make some comments and ask questions. But it's nice to see you saying hi, Gary. Let's come in here, and I got a Sunday school lesson for you. So let's come to our Sunday school lesson. Here's our Sunday school lesson. Plan your trade and trade your plan. If the market does not decisively move in your favor, just get out. All right. That's why we use these pre-programmed buttons that automatically set up our trailing stop for us and our limit order, so that when we get in, we just get out immediately if we're wrong, and then we can take some profits if we're right. If you're wrong, admit it. Break out or bail out. All right. That's what we were doing. If you get stopped out, it's probably not a trade you want to be in anyway. So the market, once you get your signal, if it doesn't just immediately move in your favor and make you some money, just get out. All right. It's a lot easier to recover from a small loss than it is a big loss. And we oftentimes say your first loss is your best loss. So once you've moved stops to break even, relax, scale some positions out, build your reserve, then let the system and mathematics work their magic. All right. Take profits along the way, pay yourself for a job well done. And when you hit your goal, stop trading. And I'm close enough. I don't want to risk another $100, $150 to try and make $15 to meet my $500 daily goal. And that's my goal for $500 a day. That's pretty good for me. I'm happy with that. And there you have it. Scalp and trail with the track and trade software. If you want the software that I'm using, of course, you can come in here. And there she blows right there. Just go to trackandtrade.com. It's a 7-time Stocks and Commodities Annual Reader's Choice Award winning platform. You can grab the platform I'm using, follow along with me, come back, and I'll keep showing you my settings, my strategies, and how I program things in. And we'll do lots of different strategies. These were a couple of my favorites today. and I'll show you some others that are really fun. We didn't have a chance to use 777 and 777 scalp and trail. We just use our number 1 and number 1 on the buys and sells. And those work pretty good. Those are why they're listed number 1. And go get you some track and trade software. Come back, subscribe, join my YouTube group, and we'll just keep doing it together. All right. And you can do what I just did. All right. Make sure you like and subscribe. And we will catch you again tomorrow morning for the morning bell session. All right. We do twice a week on Tuesdays and Thursdays. We do Power Hour. And then Monday, Wednesday, and Friday, we do the morning bell, 7:30 my time, Mountain Time, 9:30 Eastern. So we will see you then tomorrow. Have a good day.